Good morning, everyone. My name is Grant Colthup, and I'm the CEO of Mind Digital. And welcome to the Venture and Capital event hosted by Wholesale Investor. I hope you enjoy. All right, I'll go into it. I think over the last 12 months, 18 months, we have seen a massive seismic shift change in the crypto markets globally. We've seen the emergence of decentralized finance, DeFi. We've seen the emergence of decentralized exchanges, DEXs, and we've seen the emergence of DAOs, decentralized autonomous organizations, step up from their first iteration back in 2016, when we saw the most famous one linked to Ethereum be hacked and compromised, and the whole DAO movement sort of take a step back at that point in time. This movement has really invigorated the market and invigorated, I think, capital flow into the crypto space more broadly. And I think that's why it's very, very pertinent and important to this event, basis that we're talking about allocation of capital to new technologies and new projects. And the reason why we've seen that is this whole movement of decentralization has engendered two things, essentially. One, it's allowed for capital to flow into these projects more easily. So not necessarily meaning less due diligence or less transparency from the approach from investors getting transparency into these projects from point of view from operational, legal, financial due diligence, technology due diligence. It's just the fact of the matter is that the funding mechanisms can be done via non-traditional methods, obviously mostly using crypto, oftentimes making use of smart contracts. And then there can also be a lot of escrow rules put around those that also give investors comfort and safety. I think the other aspect of it that really has supercharged it is the fact of the matter at the moment is it's playing into a regulatory arbitrage situation. And that is that the current regulations globally essentially exclude a significant portion of the activity that is going on in the decentralized DeFi world, which is allowing projects to get out there, get product market fit, iterate quickly, and be able to achieve a lot more in a shorter time frame, because not necessarily always having to build and develop product with regulators awaiting regulator approval. And we've obviously seen that very topically just this week with the SEC attacking Coinbase. Coinbase approached the SEC voluntarily about a new product line that they would like to issue to users. It's a product line that there are several other large competitors who already have similar products in the market. So it wasn't that it was, a first of its kind. Coinbase obviously have had a good, track record of compliance with regulation, successfully undergone a listing. So from that point of view, everyone would have thought they would be successful in their interactions and discussions with the SEC about launching a product that is, as I said, is market standard and has been is well understood. Yet what happens? Not only did SEC not provide lack of useful feedback or discussion to Coinbase about how they actually might want to go ahead and launch this product, they actually then start taking action against them and basically say that they must cease and desist on going down this track. If not, they will face SEC action. And this on the flip side of it is the massive advantage to decentralized organizations. They are not having to be concerned with going to the SEC about getting ability to be able to issue these new products, the ability to have to change design on products, the ability on basically having to ensure that are all the users fit and proper for this product. What the DeFi world is basically relying on is I go out, I launch a new protocol or a new product, and it's basically it's the consumer and the population who decide on how that on its fit for purpose and also its success. And whilst we've seen, yes, there have been scams and there's been rug pulls, which is the insider's term for scams in the DeFi world, is largely though we've seen a massive influx of capital. The amount of assets in the DeFi ecosystem now is significant. I think and some of the protocols alone, they're over past $1 billion. in totality, I'd have to check the numbers. If you exclude the DEXs and you just look at the DeFi protocols, I think we're well over $10 billion at the moment, and that grows every day. And then if you include the DEXs, obviously that number is a portion higher again. In the DEX space, obviously we've seen the original Uniswap continue to go from strength to strength, and then SushiSwap, the largest competitor, also come in and be very prevalent in the space and driving a lot of innovation. So it's just that contrast is significant, and that is what investors are looking at, and that's what projects are looking at. Because from a project point of view, from a company point of view, I look at ourselves, we're a centralized exchange that offers fiat crypto services. We offer some other auxiliary services as well. We're AUSTRAC, we're registered, enrolled within the AUSTRAC program as a digital currency exchange. We also have previously looked at potentially needing an AFSL for certain requirements and certain activities that we've considered. But from our point of view, we feel very comfortable under the DCE arrangements, but also at the same time, we also recognise that there are activities that our users are starting to ask about, are starting to become interested in. And as being in this space, I think it's important that we take on that feedback, and that we are able to iterate ourselves with a fair bit of freedom, and to be able to do that fairly quickly. And I think at the moment, again, I think we're very lucky here. I think the regulatory regime in Australia, personally, I think we feel it's well understood. The bodies involved, ASIC and AUSTRAC, obviously ASIC more if you do go into the derivative or security angle, obviously not needed for spot crypto. I think the AUSTRAC requirements under the DCE system is very well understood, and compliance is certainly achievable if you're a reasonable organisation who dedicates reasonable resources to it. Compliance and but sticking within the lines is certainly doable, achievable. And currently, we see there's probably about 10 to 15 operators in Australia who have very good track records of doing so, and that's giving obviously confidence to people here in Australia that they can use these exchanges and can do so knowing that they've got, as I said, good track records of compliance with a regulatory body. But from our point of view, though, as I said, we've started to have users ask more questions about certain aspects of I guess the decentralized universe, whether it be DeFi or decentralized exchanges. And I guess for us, that's really led us to this point at the moment, and that is we're on the cusp of launching 2 new products. So we've decided to step away from our limit order book exchange and move towards Mine Trade, which is a fiat crypto. Basically, it is a top of book exchange. So instead of showing the whole limit order book, it shows the best bid, the best offer. And we think that for most users, that's going to be really, really simplified, but also delivers to them what they need. The other platform that we're developing and very interested in is MineSwap. So essentially, MineSwap uses 0x protocol, which is a decentralized protocol that aggregates liquidity across certain other decentralized exchanges within the crypto space. By using the 0x protocol, we can tap into liquidity across multiple DEXs, and without having to do all those API integrations ourselves. So this means that our users on MineSwap get access to strong liquidity and also strong performance, because it's basically underpinned by the 0x protocol, which was one of the it was a fairly original crypto project. It's been well developed. It's got a very, very strong set of developers, and they continue to work on the protocol extensively. The protocol is well funded. So again, from our point of view, when we were looking to do something like this, to use a solution like 0x was very attractive and made a lot of sense from the fact that point of view, it is a open source code. The protocol, as I said, has been tested many times and operated without blemish, basically. And so essentially what MindSwap will allow is users can come onto the platform and essentially swap ERC20 tokens for ERC20 tokens. And we've seen, in Australia and or abroad, some other exchanges have had a swap type functionality, but essentially what that is, it's still just an exchange doing a centralized trade. It's and oftentimes it might not even necessarily have to doesn't even go through a limit order book. It can oftentimes just be, more like a broker. The exchange just quotes a price and the user says yes or no. The beauty of the model that we've got here with MindSwap is that the liquidity is coming, as I said, from the other decentralized exchanges and liquidity pools. So users are not having to be, not going to be contingent upon, pricing of the exchange. Also, it allows us to have, the token offering can be extensive because basically it's only limited by the amount of liquidity that's available on the other liquidity pools globally, on other decentralized exchanges globally. So from that aspect, it means for most users is their ability to access coins will be greater. We think much easier. And also what it means is from an exchange point of view is, we don't have to really worry about listing criteria from the point of view that if the token is in a liquidity pool, it's on a major decentralized exchange, it's most likely that 0x will add it to their asset list. And then once it's added to the 0x asset list, it's really up to us to add it to our list. But, again, barring any concerns about the token being a security or being of, dubious quality, is, we will most likely, add that to our list, our tradable list very quickly. So, essentially what that can mean for users is, for some of these larger tokens that have been launched recently, where you see them launch on Uniswap, and then they get, they have significant liquidity pools already to support them. Their pricing is then supported by other aggregating protocols such as 1inch. We could potentially see, the token launched and then within 24 hours it added to our list of tradable assets, which I think is very interesting. And I think for users is, something that traditionally has been a challenge for centralized exchanges, and knowing this from operating ourselves is that it's not always easy to be able to integrate those new tokens quickly. You have to be concerned about where you're going to get your liquidity from, how many users do that, how many users do you think actually really want to trade that token or want to buy that token or sell that token. You have to be concerned over a whole bunch of other things that are sort of come part and parcel with being a centralized exchange. Also then, depending on what type of protocol the coin is on, you obviously need to make, questions around the wallets, the security relating to that, etc. Whereas the beauty of a on-chain solution, such as using 0x, is that is, all bedded into the protocol itself. And whilst, we continue to see the protocol go from strength to strength, as I said, not suffer any major attack or error, we think we can feel very comfortable in using it for this purpose. I think the interesting part of that becomes the extensions that come out of that, which is parts of which we are, as an organization really working through currently at the moment. And they're not, even to us, they're not all obviously clear at the moment, etc. Is where those extensions go, what they all look like, what we might ultimately end up offering to our users and how we might end up offering it. So I think one of the things for us at the moment where we're having to consider is, again, coming back to the whole decentralized movement is, are we better served by, operating as several entities? So whilst it might be part of the Mind family, Mind Digital family is that might essentially have a Mind Digital Decentralised, and that entity runs a certain amount of different products and suites, and that is done, to optimize, the offering that we can have to users, and also what we can, from a functionality point of view, from a business, what can it allow us to do vis-a-vis being a Australian domiciled company. From our point of view, what we do want to do is, where it makes sense, we obviously still always want to maintain an Australian domicile, where we want to be part of a regulatory regime that we feel comfortable with, that we know gives both us protections but also our users protections. We're very keen, obviously, to remain within that jurisdiction, i.e., in Australia, we're very keen to still, obviously, crypto to fiat transactions. As I said previously, we like the Australian regime and think it's solid, and would want to continue to operate under it for the foreseeable future. But where it becomes really interesting, I think, is these extensions, is into other products that we've seen become quite popular over the last 12 to 18 months. And some of these things some elements of them are interconnected to each other, and some of them are standalone. And I think that is a place where we're going to continue to see further growth globally in both the DeFi world and the TradFi world, or the centralized finance or centralized exchange world. So, and I think essentially that brings us to this concept, which we're starting to see grow in usage, and I think in people's interest, investor interest especially, is what's being deemed CeDeFi, which is centralized, decentralized finance, which obviously sounds like an oxymoron. And in reality, it requires a little bit of explanation to probably make sense. But the best way I can put it is it's essentially taking the best elements of the centralized world that we know well, that we've been operating under for obviously really up until the last 12 months, and then taking the best parts of the decentralized world, which, sort of are very still new. Everyone's still sort of trying to figure out what, and how to do them and what they all mean. And I think that's where you can get some, the synergies really are very strong and are quite substantial. And so, that for us has become the thesis and the main theme and concept as a firm that we are really trying to orientate ourselves towards. So we would say MineSwap is a good example of that. It offers the benefits of centralized wallet management, so users don't have to manage their keys. Users can still use support to, query, why did I do this? Why was that price that? How do I go from this coin to that coin? Why can't I? For example, another query which we've already had in our beta testing is, I can't trade Bitcoin on MineSwap. Well, no, you can't, because Bitcoin's on its own blockchain. It's not an Ethereum-based blockchain. But what you can do is you can trade, wrapped Bitcoin or Ren BTC, etc. So, things like that. Having a centralized support team that can still provide people with, answers and replies is something that users like. One of the big issues that users have with decentralized wallets and interfaces such as MetaMask is the fact of the matter is there's no one to talk to. And oftentimes, even if there is a Telegram or a Discord channel, it's quite, it requires quite a high level of domain expertise. The answers sometimes are quite, there's not really much detail given. And the other thing is ultimately as well is for, users really looking at these products and these, methods of transacting for the first time, they really are not the most, easy to understand things. So from that point of view, we, as I said, I think we look at it and we really think the fact that we can merge together those benefits is something that users will find really attractive. And I think from an investment point of view, I think the beauty of it is that investors can get, I think, comfort around the fact that you're not investing into a purely decentralized thing that exists as a foundation in Switzerland that then is managed by a governing council, et cetera, et cetera. It is a incorporated entity that operates out of a, depending on what it is, but out of a, oftentimes regulated, understood jurisdiction, a jurisdiction with a strong rule of law. And as I said, it's more about then using the best of those decentralized elements to provide an enhanced product and user experience to users. And so I think we're just going to see that aspect of the market continue to grow. It's something that's really sort of only really dawning on people at the moment. And I think the reason why it's really coming to the fore at the moment is potentially looking forward to what are the regulatory requirements coming out of the US. So earlier this year and also end of last year, there was, some proposals put forward by FATF, which is the AML, International AML Task Force, around, potential requirements on decentralized exchanges, on decentralized protocols, on DeFi protocols, on DeFi apps, essentially. And some of those would essentially require these protocols and exchanges and apps to conduct KYC and AML checks on users, which obviously they're not currently doing. The reason why that is such a seismic change would be, it's these elements have been constructed such that they have not encountered or not counted for this within the process of development in the first place. And also there's other challenges, i.e., the team really is decentralized. There is no one in the team who wants to conduct and have that compliance and risk oversight and capability. And also, again, these organizations don't have, compliance and risk staff, operational staff like centralized exchanges and centralized, finance companies and organizations already do. And so that's the part where I think, as I said, you look forward, maybe it's not 6 months, maybe it is 12 months, 18 months down the track. If some of these regulations start getting pushed through and adopted, I think, something like CeDeFi is going to become a bit of, is almost going to become the norm, where you're going to be, as I said, in the background will be these decentralized protocols and products, but at the front will look like the normal, look like the user experience that people are used to at the moment. And from a regulator's point of view, it's really then meeting their requirement. It's where, there is consumer protection then in place, because, the same level of regulations that apply currently to centralized exchanges and centralized offerings would still apply across, from a AML counterterrorism financing point of view. There's requirements are being met because people are being scanned. Most likely they're going to have to probably whitelist user addresses, and you're probably one of the models I saw put forward was that where users would voluntarily come forward and nominate addresses and nominate wallets that they want to use on these on these venues, and then that way regulators, whether or not they be securities regulators, taxation authorities, or AML authorities, they can have that visibility there, and it's all provided. So I think that is, as I said, I think that's going to be the next big thing we see. And I think what's that going to do is lead to a bifurcated market. So we're going to have a regulated CeDeFi market. I think we're going to have an unregulated DeFi market. And I think what will happen is I think we'll continue to see the unregulated DeFi market probably not grow as quickly in terms of assets as the regulated space, because I think once some of these elements of DeFi do get regulated, you could see institutional money flow into them relatively quickly, because they are offering very, very good investment opportunities. But I think what the unregulated DeFi market will continue to do is be the source of innovation, the thing that is developing at breakneck speed, that is just iterating itself, very, very quickly, and really delivering all this, all these things we're seeing just explode out of this very, very short period of time. And I think there's room for that to continue for quite a period of time. I don't think there needs to be an amalgamation or a merger between those two segments, because I think, that is ostensibly what is the decentralized revolution. That is decentralization. That's a movement, that is a concept that is not going to reverse. People have seen the power of organizing in this decentralized way. It has incredible implications for running firms, running large firms, small firms, running firms across multiple offices, multiple sites, all this case. So I think we just see that they can go hand in hand. I think, again, there's oftentimes, I think, a lot of misnomer or misunderstanding that they have to be antagonistic to each other. Yes, there obviously are going to be times where it is antagonistic and it is one or the other, but I think in most of the cases they're not mutually exclusive. They can both coexist. They can both offer their own things to different users. And I think then longer term, though, I just do think that the decentralized element will take over. So I think we see essentially a explosion in this centralized regulatory DeFi world in the next 3 to 5 years. And I think past 5 years, I think we see that the decentralized world just comes back and becomes the dominant force as regulators get comfortable, as users get comfortable, investors get comfortable, developers get comfortable, and I think that then that's the big leg up again in this space. And then obviously the buzz at the moment and it really is game changing again is the application of NFTs to the decentralized world. Again, regulation cannot keep up with the level of innovation that is going on. I mean, at the end of the day, is an NFT just a physical good? If you have an NFT and that is a representation of a painting, it's hard to argue that the regulation on that token is anything other than what would be the regulation, that relates to artwork, the sale of artwork, the commissioning of artwork, the distribution of artwork, everything to do with that being a physical good and a physical item of art that people can, either look to own from an investment point of view, from an enjoyment point of view, or a mixture of both. But where the line becomes super interesting and blurred is when that NFT is no longer just a piece of art, where the NFT has certain elements to it that actually give it financial value over and above the artistic value. Again, we're not going to get into an argument over what is artistic value. It's just, I think it's just easy for us to say in this context, artistic value is the fact of the matter is that there is piece of art that's been done, whether it be musical, visual, or something in between, a combination of both, that has some value to someone. But, we can consider, and already there are elements of NFTs where they also have, links to profit shares, or they have other elements to them that make them, financially valuable as basically securities or as, an alternative form of cryptocurrencies. And this is the part where then, from a regulatory point of view, it becomes really super interesting, because it's how does that then work? How do regulators go, okay, if it isn't an NFT wrapper and it is an NFT, as in there is some visual representation tied to it, but it also has this security type element to it, like say it is a profit split, the holder of the token gets some, share of profits. Well, traditionally, if that wasn't in this wrapper of this NFT and it wasn't an artwork as well, I mean, if that was just a contract on a piece of paper, ASIC would have no problem deeming that to be a security and would look to regulate it as such, and would require the person issuing that security or piece of paper to meet certain requirements. And on the flip side of it, investors would need to, would have protections, but it would also need to understand, is it only for sophisticated users? Is it only for, retail users? Have they read the PDS, etc.? All those types of elements, which I think become, in this space, in this NFT space, then are not, completely obvious from the get-go. And I think then become really, really interesting again. And I think we're just seeing the start of this, NFT explosion and evolution. And obviously, again, it seems like everything in the crypto space, it's happening at breakneck speed. And we're seeing, people really consider how they could use NFTs as a functionality for, bringing to life basically new assets, because there can potentially be the combination of many elements into a singular token, into a singular thing. And I think that is the part that has everyone, waiting to see what happens. But I think also is the part where, from an investor's point of view, potentially, obviously very, very exciting opportunities there. I think one of the hard things is for most people at the moment is to get their heads around is on the opportunity side is how do you go about actually, identifying these opportunities, but then, analyzing them. How do you, then how do you participate in them? So again, some of these, mostly at the moment, most NFTs are then only trade, bought and sold on marketplaces. They're not obviously on exchanges, even though they could be. And it's things like that, I think, where, it's so new and we're so at the start of this whole process that there are everyone has more questions than they have answers. And as I said, that is by definition almost the, opportunity for investors. So I think for those who are savvy, who have the capability to spend time, to spend resources into that space, I think they will be well rewarded. I think there is a lot of really interesting things going on there that, will continue on to the future as well. I think, again, people at the moment very much confuse the difference between, well, NFTs are a bubble. Well, yes, there obviously are certain elements of the NFT market that have, skyrocketed in value and probably do display elements of being a bit frothy. But it's I think, again, from an investor's point of view, I think it's the most crucial point is to separate out the specific asset versus the concept. And the NFT concept, regardless of whether or not you think a rock, a computer generated picture of a rock is worth anything or not, the fact of the matter is it's the underlying technology. It's the fact that they are being, computer generated images. Some of them are quite good. The rock one is done very much tongue in cheek. But the whole then technology wrapper around an NFT, the regulatory wrapper around an NFT, those things is without doubt, that is not a bubble and that is not frothy. That is a new way of conceiving assets, a new way of conceiving concepts, and a new way of combining value, that is the truly exciting part of this. So I think we've seen, I guess the theme of this, keynote has been, the last 18 months is, the Cambrian explosion of DeFi, decentralization has finally happened. I think people were thinking that may have happened, 2-3 years ago, but now it's here. It's, firmly out of the box. It's progressing at a great rate of knots. And I think for anyone who's serious about allocating assets and resources into the digital asset world, into the crypto world, this probably has to be your main point of focus. I think, understanding the protocols, tick, very important. But I think, even the protocols, they still all rely on this concept of decentralization to some degree. So I think that is really the theme for me that I think people need to take away is understand the different flavors of decentralization. How is it being treated globally in different regulatory regimes, different taxation regimes, different banking regimes as well, obviously becomes important. And then just understanding how it is going to drive the next 20 years of investment markets and investment opportunity. And I think we're all very lucky to be involved in it at the start. There's still plenty. I'd still got obviously a long way to go. And I think there's some really, really quality persons building quality products in this space, which, I think for most investors, again, I think they, even the, those who are the most pessimistic or questioning about the space. Yes, there is a lot to question about the space. That's a given. There has been a lot of bad actors in this space, but that's getting cleaned up rapidly. And the amount of good actors building, high-end protocols and products and platforms that, any traditional financial market engineer would be proud to build and to facilitate trading on. That's where we're at. I think it's an amazingly exciting time, and thank you. And I hope you enjoy the rest of the day.